Hello, everyone. Thank you for joining us today at FTT Embedded Finance North America, and thank you for joining my session. My name is Theodora Lau, and I'm the founder of Unconventional Ventures. Now, apart from projects with various corporate clients from around the world, we also host a podcast called One Vision, available via the Apple Podcast, Spotify, and other players, that aims to tell a story with a purpose. We have also recently launched a new book called Beyond Good: How Technology is Leading a Purpose-Driven Business Revolution. Do check it out at your major bookstore near you. Now, let's talk about why we are here today. The party is just getting started. Now, I'm not talking about a beer party that Victor will probably host later, but the Fintech party, and specifically embedded finance. What is embedded finance? Simply put, it describes a model where consumers can obtain financial services wherever and wherever they need them. It empowers a seamless integration of financial services within the product offerings of non financial entities. So, companies with no previous financial products are able to introduce services like financing, integrated payments that help to deepen their relationships with their customers. Now, most of these firms that are taking advantage of embedded payments have core brands that have very little to do with financial services, such as Peloton. But these brands are still recognizable and regularly used, creating habit forming usage that's transferable to banking. And this represents a big market opportunity that includes embedded insurance, embedded lending, payments, and investing. That's why the party just started. Now, from a high level perspective, the rise of embedded finance, which can be attributed to three main factors. The first and most significant one, I'd say, is customers are increasingly looking for simple, holistic, embedded, and direct experiences, such as being able to finance a purchase within the checkout experience. Regulatory trends include PSD2 and open banking are also promoting the development of banking APIs and universal access. With the acceleration of digitization, such as what we've gone through recently in the past few years, including automation and APIs, bank can scale bank as a service faster, putting embedded finance within reach for more companies that are considering it. And at the same time, companies looking to embed financial services are increasingly seeing their digital experience as a composition of modules that are built by others. And last but not least, a change in how we work and how we earn an income. The rise of on demand workforce, the gig economy, if you will, needs a different type of service, one that is on demand and within the app. Now, if you ask me, how did the story start? I would say that started in Asia. A lot of us are already familiar with brands such as Ant Group and Tencent, the big tech companies in China that powers Alipay and WeChat, the super apps of the Far East. But there's a lesser mentioned but equally impressive ecosystem in Southeast Asia, where their own super app platform have also perfected this process of embedded finance early on. Grab and Gojek, they have seen tremendous success building interconnected systems of money movement that link a consumer's wallet directly to in-app services. By leveraging the power of open banking, e-commerce, food delivery, transportation, utility payments, and even insurance products can meet consumer needs in a new and effective way. In fact, the Southeast Asian market is a very interesting region, if you ask me. The population is far from homogeneous. There are 11 countries within Southeast Asia, all with very impressive diversity in religion, culture, and history. Singapore, Thailand, Vietnam, Philippines, Malaysia, Indonesia, to name a few. And there are 670 million people, twice the size of the US. And 6 in 10 are either unbanked or underbanked. So I'm going to take you around the world, and we'll start with Grab. That's headquartered in Singapore. They provide a wonderful example of embedded finance. It mostly operates in Southeast Asia, and it is the region's first decacorn. As of May this year, its valuation was just under 40 billion US dollars. Now, this company started in 2012 as My Taxi app that was based in Kuala Lumpur, Malaysia. It quickly expanded the next year as Grab Taxi. And in the process, they recognized the needs of the drivers who, at the time, lacked access to formal financial services and has since expanded following the super app model that we most often talk about. And under the Grab umbrella, it has Grab Pay, Grab Invest, and Grab Insurance for its customers, covering mobile wallets, payments, investment, travel, and ride insurance, all accessible within this one app. And as for its drivers, they can get buy now, pay later and health and auto insurance through Grab Finance and Grab Insurance. And they also provide merchants with the ability to support point of sales, buy now, pay later, with installment or pay next month options. And given that Grab is already so deeply integrated within the lives of its existing customers in Southeast Asia, the push towards embedded finance, which started a few years ago, has transformed it to become a one-stop shop platform layered with financing capabilities. Next, we head to India. And here's an interesting company called Aqua Connect. It provides end-to-end solutions to 35,000 shrimp and fish farmers from pond to plate. This company is part of Flourish Ventures' portfolio of startups, which aims to bridge the gap between the farmers and formal financial institutions and help them get formal credit and insurance products, and in the process, financially de-risk the farmers. They have an AI dashboard with satellite remote sensing capabilities that help the banks and insurers build credit profiles, evaluate risk scores, and validate and monitor portfolio performance. Now, the inclusion of low interest credit and risk mitigation in agriculture helps to de-risk the entire value chain. And as a matter of fact, AI and satellite imagery have seen an increased adoption by various agtech worldwide. And next, we travel to Egypt in Africa. Max AB is founded in November 2018, and its platform manages procurement and grocery delivery to shops in Egypt with 55,000 merchants. And store owners can use the platform to purchase goods, request delivery, logistics to move the goods, and get to a customer support team. What's interesting about this platform is it has received over $46 million so far of venture funding. And using the vast amount of data that it has on its merchants, MaxAB can now accurately predict the financial status of all the merchants that it works with. And then by working with banks and non-banking partner, the company can offer credit facilities and capital financing to these merchants. And then we come to Mexico, where BBVA has launched its first banking product that operates in a third-party app, in this case, Uber. This partnership enables Uber's driver and delivery partners, as well as their families, to create a digital account that's linked to the international driver partner debit card so that they can directly receive their earnings in just a matter of minutes and also access a platform with financial benefits such as loans or non-financial benefits such as discounts and reimbursements for buying gas with just the driver partner card. Now, of course, your question is, well, what about the US and the UK? We're all familiar with the Peloton example, where a firm provides buy now, pay later financing option to make it more enticing for customers to make the purchase. And recently, the UK retail giant John Lewis has teamed up with digital wealth manager NetMac to launch 3 retail investment products. John Lewis customers are now able to save into a junior ISA, which is an individual savings account, stocks and shares ISA, as well as a general investment account. All these 3 products all these, sorry, we might need to edit that part. Oh, all, thanks. All 3 products invest in funds with high ESG standards, and individuals can start investing from as little as £100 and choose a time frame and risk level that suits their circumstances. Now, this is a really neat example in that. So, John Lewis is a very well-known department store that competes with the likes of Marks and Spencer. But it will be very interesting to see how often people would think about getting an investment product while they're shopping for sheets in China. I have my bets, but I'm sure time will tell. And other examples in the West obviously includes embedded insurance for the gig marketplace. And as many gig workers lack access to benefits such as ability to save or ability to get insurance, this represents an opportunity for a growing market segment. Of course, we can't talk about embedded insurance without mentioning Truth, which is purpose built to embed insurance products within all the other digital experiences, from renters and pets to auto and home insurance. And here we have an interesting Canadian travel fintech called Hopper. Founded in 2007, it helps customers save money through an AI driven price comparison and predictions for air, rail, and other hotel accommodations. Hopper also offers add ons for travelers who want to freeze a price or rebook without extra cost. And these services, according to Hopper, represent half of the revenue because everyone wants to look for flexible bookings. But what's interesting though with Hopper is the other product, Hopper Cloud, which recently they announced a partnership with Capital One, allowing them to offer travel services to Cap One's customers. And the company recently raised 175 million Series G at a $3.75 billion valuation. Now, if you ask our friends, including Alex Johnson, he will say that travel fintech is just getting started. And of course, last but not least, we cannot talk about embedded finance in North America without mentioning Stripe Treasury, which enables merchants and vendors to make ACH and wire transfer through Stripe's banking partners. And their clients can also get access to interest-bearing bank accounts and faster access to payments. Shopify, one of the clients, for example, is able to customize their Shopify balance for their merchants, providing them with a one-stop shop to manage their funds, pay bills, and track expenses. As we look towards the future, this sentiment by Railsbank captured it best. Make embedded finance into apps and customer journeys as simple as a drag and drop. Embedded finance is at the core of how unbundling is changing the way financial services are being delivered and consumed, allowing us to reimagine where financial services can be served and distributed at locations where customers engage with, rather than being herded to bank branches, apps, or a website. With data at the center of it all, though, very valuable data at every aspect of a customer's physical and digital lives, from what they do, what they buy, what they owe, to who they are, who they socialize with, who they connect with. There is so much more that we can do beyond payments, beyond insurance, beyond investing, and beyond lending too. Because now we have an ecosystem where gig workers can get access to on-demand insurance and savings vehicles with a brand that they know that is outside of an incumbent bank. And now we also have a platform economy where consumers can use just one app to buy things online, pay for transportation, food, and other services, connect with friends, family, save, invest, buy insurance, again, everything outside of the incumbent bank. So there is much more we can do. Just like how it has become second nature for many of us when we get into the car and we would pre-program in a destination into our GPS and let technology guide us and dynamically reroute us based on traffic conditions just to where we need to go. So what if? Can we have the same when it comes to our money and financial lives? Where we can have a financial GPS that will take in all of our data, everything about us, our changing lifestyle as we go through different life stages, our income, our debts, our obligations, our habits, our health, our dreams, our aspirations, our families, and dynamically guide our actions, plan our routes to get us to where we need to be, and to help us figure out, for example, which debt to pay off first, what investment vehicle we can use, how can we save for our kids' education and also plan for our parents' caregiving needs? How do we plan our retirement when everything has gotten so much more complex? And what is our decumulation strategy? How do we plan to draw down? What benefits are we entitled to? And how do we do it in the best possible way? And instead of a set of worksheets that you revisit once a year, just like a static set of paper maps of the past, what if we have this financial GPS that acts as our companion along the way? That changes, depends on how our life changes, and a true democratization of wealth management where we can all afford to have our own advisor or a personal CFO. The need for better financial services that serve a true purpose for a larger demographics of our population isn't isolated to just developing economies alone. In the United States, we still have 12 million adults who are unbanked, 24 million who are underbanked. From immigrants to gig workers to LGBTQ communities, there are still so many whose needs are not being met by incumbent institutions. So we still have a long journey ahead of us. In our book Beyond Good, we have described some of these demographics that can use more innovation in thinking beyond just creating mini replicas of the old with a new paint. So consider our changing demographics, for example. For the first time ever, there are more people over 64 than there are kids that are younger than 5. By 2040, 1 in 4 American workers will be older than 55. By 2050, 1 in 6 people in the world will be over 65. That's up from 1 in 11 just 2 years ago. Now consider this. 1 in 4 people in Europe and North America will be aged 65 or over. That's twice as many people that are older than 65 than their kids under 5. But that's not the only picture. We have gained an extra 30 years of healthy living since the early 1900s. We just need to be better prepared for living longer. And aging, as I often say, is not just about decline. In the US alone, people that are older than 50 have contributed over $8 trillion towards the GDP, or 40% of total. They occupy over 88 million jobs, that's 44% of the total, and over $5.7 trillion in wages and salaries. This is a longevity economy that is growing, that is alive, that is well, and it is the fastest growing part of our global society. How are we serving this growing population? Can we do better? How can we better answer some of the very questions, simple ones, such as, do I have enough money in my later years? How much can I afford to spend? This fear of outliving your money is a reality that many live with, but that's something that technology can solve for. Or what about the needs of women? While there's more recognition of the need of gender equality, I would say the progress has been painfully slow. Consider this for a moment. It will take 136 years to reach gender parity, according to World Economic Forum, and 268 years to close the economic participation and opportunity gap. That means that not only I will not see that day, my kids will not see that day, and neither will their children. Perhaps it will take a few more generations, and that's not acceptable. We're still looking at 40% of wage gap between men and women. And women, on general, spent 7 extra years doing unpaid domestic work compared to men. Imagine what you would have done with that extra 7 years. That's enough for an extra bachelor degree, an extra master degree, and 1 full year just to sit around and chill and not do anything. Now, that would have been wonderful, but we're not there. And back to financial services, there are still 72 countries that do not allow a woman to get a bank account. And unfortunately, as a result of the pandemic, it's gotten worse. More women are dropping out of the workforce to focus on taking care of their kids or their older parents. 1 in 4 women are considering taking a step back in their career or just leaving. And nearly 1.5 million mothers are still missing from our workforce just in the United States alone. Now think about how that would impact their long-term financial security. And these are challenges that us together, financial services, incumbents, or fintechs, can help solve. The way we live has changed. The way we earn a living has also changed. And we need to adapt to the changing nature of work, which is becoming more transient, less secure for many of us. COVID has impacted most industries, but especially gig workers. So here's the question I would like to leave you with. How are we helping entrepreneurs? How are we helping small business owners? How are we helping the gig economy workers, the women, and the immigrants of our society? There's much more that we can do. And I hope that some of these examples, by taking you around the world, has given you some food for thoughts. And do subscribe to our podcast on Vision and check out our book, Beyond Good, because there's so many stories of inspiring companies, entrepreneurs of different sizes around the world that are all in the journey to try to make this place a better world. And we believe that decisions that we make in life matter, that everyone can make a positive difference in the communities that they live and those that they're fortunate to serve. We do believe in the power of hope, which is the heart of our journey. And that's what we need right now, regardless of where you are. So please do feel free to reach out, and thank you for joining me today. And I'd like to thank Lisa, Flora, and the Fintech Talents team for including me, and enjoy the rest of your day at Fintech Talents Embedded Finance North America.